China is the big news. It's vowing to unveil what it calls more proactive fiscal measures and moderately looser monetary policy next year to boost domestic consumption. That's according to an official readout of a key policy meeting. And it comes as President-elect Trump is promising tariffs on Chinese-made goods entering here. So how do you best invest in China now? You can see some of the movements here. Not much overall for the Chinese stocks, but a lot of the U.S.-listed Chinese names in particular. Joining me to make sense of it all is Jason Su, founder and CIO at Rayliant Global Advisors. Jason, we all remember David Tepper's big call on China a couple of months ago. He said at the time you should just buy everything. That said, there's been a lot of disappointment at what, there's not like a big bang moment here, but for the stimulus measures either. So what do you think people should do?
Well, I mean, first of all, I think Beijing's been somewhat unwavering since the end of September about going to do what it takes to save the economy, whether it's with Trump 2.0 or not. They're going to pump in money. They're going to spend money to really rekindle growth. Now, I think people are too fixated on specifically what is the right policy, what will work. I don't think anyone knows. But I think the only thing you need to count on, as Tepper says, is Beijing will get it fixed. They'll keep throwing money at it until it gets fixed.
But they're working sort of against themselves. I mean, they could have not, put the boot on the neck of the tech giants a few years ago. Like, at what point do we really see a meaningful change? But maybe that's a side question to whether the central question of what to own there. Do you agree with Tepper? I mean, do you think people should just own a wide basket of Chinese stocks or do something much more tactical?
I would say, first of all, you do want to be tactical because this is a market where it pays to be active. And in this case, being tactical right now means you do want to own a broad basket, right? Because it's going to be a lot of money coming in and flooding the market. It's going to lift all boats. I don't think you want to sort of pretend you have a crystal ball and know exactly what stock that water might go toward. I would say right now, be tactical, own a broad market, and you're going to do pretty well.
There have been different things like over the years betting on the Chinese consumer. But to the extent that China keeps artificially lowering its currency, it's hard to see them ever having a real vibrant consumer spending economy. So should we just bet on the same old, maybe more of the suppliers, the manufacturers, that kind of thing?
I do think so. I think it's going to take a while for Chinese consumers to regain confidence. It's not that they don't have money to spend, right? This is not the Japan situation where consumer bet too big on home prices and, lost their shirt, right? This is where they're sitting on $30 trillion in bank-like deposits that households just don't want to tap and don't want to spend. The confidence issue. So I think right now it's going to be the government spending, stimulating. It's going to be stimulating the export. It's going to stimulating manufacturing. So I'd say the consumer play, you can probably wait for phase 2.
All right, if we get one. Jason, thanks. Always good to check in with you, Jason Su.